Well, the cost of living has risen once again. The repo rate has increased by 25 basis points to 4.25%. Reserve Bank Governor Lesetja Kganyago has blamed a number of factors, including high electricity and fuel prices. But I'm now joined by economic analyst Precious Lugayeni to discuss this. Precious, good to have you back. We had a conversation early on in the week, and you did call it that, of course, the Reserve Bank would be expected to increase the repo rate rather by another 25 basis points to, of course, 4.25. For the ordinary South African watching this right now, what does this mean for their pockets?
Thank you, Tumelo. It means less money in their pockets because the loans that we pay are going to, the installments are going to increase, the bonds and the car loans and all those kinds of things. But what should worry us more is that it shows that the Monetary Policy Committee is taking a very aggressive stance concerning the interest rate. Yesterday, you recall that there were two members wanted the interest rate to be increased by 50 basis points, which means we can bring for more increases of the interest rate. And as the governor also mentioned, the multiplicity of factors that cause an increase in the interest rate. But most of those factors, or some of those factors, are external factors, which means that we can brace for hard times ahead.
Yeah, and also some of those factors, Precious, that the Reserve Bank governor mentioned were skyrocketing oil prices as well as electricity prices that we are seeing. And you're saying it's not going to get any better?
It's not going to get better, Tumelo, because you see, it's not going to get better. And the longer the war takes in Ukraine, the longer the harder going to things to be. But what really concerns me, I don't have answers, of course, but what worries me is that our spending is low anyway because of the high rate of unemployment and people who depend on grants. And then if you increase the interest rate to depress or to cap spending, you are capping spending that has already been capped by other factors. And in other words, inflation that we have now is not the demand pull inflation, it is the cost push inflation. So in other words, you can increase the interest rates and make life more difficult. In fact, the interest rates are going to cause even a higher inflation rate. In February, our interest rate was about 5.7%, which means that soon our inflation rate is going to break through the range of between 3 and 6, which is going to be troublesome for us.
Precious, when we look at the South African economic growth and in the context the bank was speaking to, it seems they've also hiked the expectation there, which seems to be now expected at 2.0% in 2022. And when we look at the previous 1.7%, it seems to be revised now from that 1.7% since the previous MPC January meeting. What do you make of this increased sort of expectation for South Africa's economic growth?
You see, the expectation is an expectation. It may be met and it may not be met. But I don't know what they base that on, because the 1.7% that we had previously, remember, that came from a very low base. We had negative growth in the previous quarters. So the revised one is not likely to be met because there are no investors. There's no increase in the production of goods because the production is becoming more expensive. As I say to you, the inflation that we have is cost-push inflation.
Right.
I don't see any improvement in economic growth, but let's see, the expectation is an expectation which may be met or it may not be met.
And just before I let you go, also looking further ahead, it seems most economists are also expecting another 125 basis points hikes by at least the end of 2023. Do you share the same sentiments?
If you look at like I said earlier, Tumelo, you can see that the Monetary Policy Committee is taking an aggressive stance on interest rates. I see the same thing because if the things don't change, particularly external ones, don't change, then it means the interest rates are still going to be higher. And remember, in 1st of April, the electricity rates are going up, which is going to cause an increase in overhead costs and make it more difficult or more expensive to produce goods, and then the producers of goods will increase prices, and then the inflation will be higher, and the Reserve Bank will continue to increase the interest rates. But I think it's high time maybe the economic theories are reimagined or rethought, because if you increase the interest rate, you are dealing with the supply side, with the demand side of the economy. You're suppressing the demand for goods. But what I see, because as I say, the interest rate, the inflation rate that we have is cost-push inflation. In other words, we are using the demand-side solutions to solve the supply-side problem.
All right, Precious. Well, I appreciate you speaking to us this morning. Economic analyst Precious Lugayeni. And we know that those increases take effect as from today, giving South Africans not enough time to actually go back and restructure their finances. And one can help but think about also those who depend on the 350 social relief grant at this point. I mean, that basically means nothing for your food basket. But we'll continue to monitor these developments right here on eNCA.